you some of the big stories then from Switzerland today. Now, we're going to start with Swiss Re. 2017 was, of course, one of the costliest years ever for the reinsurance industry, what with all the hurricane damage. But despite this, a group net income of $331 million has been posted this Friday for Swiss Re. The talk of the town, though, is not the results. It is, in fact, the approach from Japan's SoftBank. Now, Swiss Re has said this month that it's in talks with SoftBank about them taking a minority stake in a deal that could be worth around $10 billion or more. My colleague Andreas Hahn spoke to David Cole, the CFO of Swiss Re, about the details of the talks with SoftBank and the impact of natural catastrophes on full-year results.
Indeed, these three large hurricanes that impacted the North American market in Q3 of 2017 are only a subset of the overall level of large natural catastrophes that impacted the world in 2017. Overall, we estimate about 135 to 140 billion of insurance losses off the back of large nat cats in 2017. The three that you mentioned for us, including the Mexican earthquakes, were about 3.6 billion of estimated losses. That's incorporated in our 2017 results. For all of 2017, we incurred about 4.7 billion of large losses off the back of nat cat. But I think it's important to note that's why we're here. We're here to support our clients when those types of events occur. We're here to make sure they get their claims paid. We're here to help them recover, to help them think about their own resiliency. Now, notwithstanding these large losses, which are in our results, we still printed for the year 331 million net profit, and that reflects the diversity of our business streams. We had a very strong performance with both our life and health segments and a very strong performance on our investment side.
Apart from these numbers, one topic is very important for Swiss Re, the stronger engagement of SoftBank. What does this mean in the end for your company?
Indeed, we've announced that we're in preliminary discussions with SoftBank. We updated today those discussions are continuing regarding a potential partnership and minority interest. Those are ongoing discussions, so it's simply too early for us to say anything more specific about them or any detail. I think Swiss Re is a very strong company. We've confirmed that today. Our capital position remains excellent. I think our market position remains excellent. Our client franchise remains excellent. And we have a very, I think, well-articulated strategy that we continue to pursue.
But a stake of 30% would mean as well as strong access to the so-called big data of Swiss Re. What is the advantage for your side?
So I won't refer to any specific details of the discussions. The discussions are going on, therefore it's too early to talk about any specifics regarding the outcome of those discussions. As when we do have something to say, we will.
The Japanese side wants to have 2 or 3 seats in Swiss Re's administrative board. Is this acceptable and realistic for you?
Yeah, thanks for the question, but as I mentioned, we're not at this point able to talk about any of the details of the discussions, any of the details of potential transactions. In fact, we can't even confirm a transaction will happen, so we just have to wait and see.
Let's come now to the current year. The contract renewable round in January is done. Are you satisfied with that for 2018?
So the January renewals for us are just under 60% of our overall renewals on the reinsurance P&C side. I would say that the outcome of the January renewals was more or less in line with our expectations. You've seen that we announced about an 8% increase in premiums, about a 2% increase in pricing. We had some lines of businesses where there were relatively low losses in 2017, and there you saw modest, if any, changes in pricing. Those areas that were impacted by losses in 2017, we saw more significant increases in pricing. I would say, yes, we're satisfied, but still very important for us, of course, are the renewals that will take place in April and June and in July.
So could you stop the declining trend in pricing with primary insurer, or what's the current trend for you?
So after the large losses in 2017, on the top of a fairly significant decline in pricing that had been taking place since about 2013 in the large commercial segment, yes, we believe an inflection point has been reached in pricing, already reached in Q4 of last year after these large losses. And our expectation for 2018 is indeed increasing pricing in the commercial insurance segment.
Are you planning another share buyback program?
I'm very pleased to say the board of directors has decided to request a dividend of 5 francs per share, which is up by about 3% from last year, as well as seek authorization for a new share buyback program. Once again, this, I think, clearly underlines, confirms the capital strength of the Swiss Re Group. We're in a very strong position. We maintain very ample flexibility. we're able to write business for our customers and I think return capital to our shareholders. And that's a very, very good place to be.
Perhaps the last question. The climate change takes place. How good is Swiss Re prepared in the long term for this phenomenon?
So climate change, I think, is something that's important for society as a whole. We've been aware of climate change for many, many years. It's been a focus of our attention, of course, as an insurer and reinsurer. I do believe we're working with our clients to help them understand the potential impacts of climate change and to prepare for climate change. Now, we write protection, and we need to make sure that the coverages that we provide are adequately priced. So as there's an indication of potentially increase in severity or frequency of storms, we'll need to make sure that the coverage that we're providing is properly remunerated, that we earn also an attractive return for our shareholders.
Well, as you can see, investors reacted very happily to the results news. Swiss Re finishing the day very much in the green today. Also, something to bring to your attention, Swiss construction chemicals maker Sika. Now, they reported better than expected net profit for 2017 this Friday. Here are the figures. Net sales are up over 8% and net profit is also up 14.5%. But the share price, well, it went down today, and that's because of a hostile takeover bid by French company Saint-Gobain, which is still pending. Here's Sika's new CEO, Paul Schuler, on the situation.
Oh, we had a great momentum in the United States with a growth rate of 18%. We had also great markets in Europe and also in Asia. So we were very well-traveled and well ahead.
You surpassed the high market expectation by topping the sales mark of 6 billion Swiss francs for the first time. Can this trend continue in 2018?
We had a great start in the first 2 months now, and we are confident that we will achieve a growth rate of over 10% also in 2018.
In which markets do you expect the largest growth potential in the current year?
Oh, I think also the United States will have a great run this year, but also China recover from the market. Then Southeast Asia will be very good. Also, we believe Europe will stay strong. So it's overall a mix in the world where we expect good growth rates.
Which are the most important mega trends that drives the growth of Sika?
One is the new vehicle, lighter, faster vehicles, electric vehicles. That's a big mega trend. Then the urbanization around the world in mega cities. That's a big trend. Then which needs more refurbishment in a mature market. So we have several mega trends which we can enjoy.
With this successful year, the Sika share price rose year to date over 44% is on a record high. That fact makes it more and more unlikely for the Burkhardt family to realize their deal with Saint-Gobain. Are you in contact with the Burkhardt family about the takeover battle?
We are all the time in contact during the board meetings with Urs Burkhardt. This high share price offers Sika now the possibility to handle a higher offer than Saint-Gobain, and we are confident that we'll find a way with the family that Sika stays in Switzerland and not sold to Saint-Gobain to France.
Yesterday, Saint-Gobain restated its ambition to take over Sika. The Burkhardt family wants to renegotiate the deal. What consequences such takeover would have on Sika?
First of all, I can understand that Saint-Gobain wants to extend their contract. However, the consequence would be quite severe. Sika would not be any more Sika as it is today. And as I said before, with this high share price, I still hope that the family find the right thing to do and leave Sika independent.
Do you see a higher chance to settle the lawsuit for a better solution?
Yes, I think we should work on that. And as I said, with the share price, all opportunities are there that everyone can walk away as a winner.
So what would need to happen that the family stop the plans for selling their shares?
Well, I think that's the decision of the family. The next ruling is now due in the next few, whenever the judge decides, and then that's open an opportunity to discuss.
How much are you personally involved in the takeover battle?
That's the board who works on it. I try to use everything to support it, and I try to find a good solution wherever I can help.
How much did the takeover battle cost now?
On the last General Assembly, we announced 30 million, but if you see that we talk about a 20 billion company, is that a small amount which we pay for our independence?
So you are expecting the Zug High Court decision with serenity?
Yes, we are confident we will win, and the first verdict will be confirmed.
The Burkhardt family demanded lower dividend rise amid the takeover battle. Now the dividends are higher. Why so?
The dividend should be for the shareholders, and Sika can afford higher dividends, so we should pay high dividends to all the shareholders.
And finally, what about your acquisition strategy? Are you continuing it in 2018 like in the previous year? And what concretely are you looking for?
We feel it's a big market out there, and acquisition is a part of our strategy. And we will keep the space, and we will work on more acquisition also this year.